Hello traders and welcome to another video review. Today is Monday, January 22nd, 2024. Let's find out what is going on the economic calendar for today. We got plenty of data scheduled for release. However, all of this data are rather not important, because if we switch to the high importance settings, you can see that there is no one, not even one of this events is very important. So it looks like we are going to have like a quiet Monday. Perhaps we just finished the weekend in Davos. We just finished the important data releases from the all over the press. As you can see, no high data today, no even medium data. Do we have any medium data from all over the world for today? No. As you can see, all we have to say is okay, there is a low important data all over the place. Let's take a look then. Let's take a look what's going on here. Let's take a look what are those low importance data. I don't think there will be much of an interest for the general market. Maybe for the particular countries, maybe there will be something like this scheduled for release today. So we got data from China, as you can see, data from Malaysia, from Indonesia. We got some data from Europe, like Estonia. We got data from Qatar. And of course some kind of a data from the Switzerland. All of these are like money supply or CPI. Hong Kong CPI is 2.5%, decreasing slightly. Data from Poland are scheduled for this at 10 o'clock. Construction construction output from the Eurozone is scheduled for this at 11 o'clock. Again, some GDP's data and CPI data from Qatar and Oman. Then we have the Latvian PPI, and as you can see, not too many important data at all whatsoever. During the New York session, we got US leading index scheduled for release at 4 o'clock, and 3-month and 6-month bill auction scheduled for release at 5:30. So very light calendar for today. Maybe for some particular countries we got something interesting to say. Nevertheless, let's take a look at the technical part. Euro dollar. The 4-hour chart of the euro dollar since the last week is actually trying to bounce from the key technical support 1.0846. It bounced roughly above the next resistance 1.0890. Local high was made at 1.0910, so it's not that far away whatsoever. Now we are heading towards the 100 periods moving average located at 1.0926. As you can see, volatility is very poor during this decreased range of the volatility. The market bounced from the extremely oversold conditions towards the level of 50, and now it's breaking a little bit higher. The RSI is 50, almost 3 points. Nevertheless, it looks like this intraday technical resistance at 1.0907 will be the top of the move for the markets. We are still trading below 100 periods moving average on a 4-hour time frame chart, below this short-term trend line as well, the orange in my chart, and below the key supply zone that could change the outlook to more bullish. So not too many movement today from the euro, the dollar. We are waiting for some fundamental triggers to make this movement more violent and directed towards some kind of a particular level. Pound. British pound is almost in the same situation. However, the bulls are still fighting for the this time blue trend line. They broke below this trend line, but hovering around, up and down. And this day, early morning, we are moving lower from the daily highs at 1.2723 towards the blue trend line support. Again, the range is limited to 1.2660 and then 1.2647. Both of these levels will act as the intraday technical support. The key support is of course the bullish engulfing low 1.2596. Any breakout below this level will open the road towards 1.25. Basically, this is the key technical support. The market, of course, bounced from the extremely oversold conditions. The current level is 52 points on the RSI. The highest was 57, so we are right now moving back towards the level of 50. Let me just place this level for you guys here, so you can see this is the level of 50, and it looks like the market is, you see, hovering around up and down, just around this level. So we need a breakout. We need a decisive breakout in one of the direction. The most important one for the bulls is, of course, the technical resistance, or the supply zone located between 1.2794 1.2784. So this is the 10 pip zone, and if this zone is violated, then the swing high at 1.2825 will be a challenge. On the other hand, the most important level for bears is the technical support or demand zone located between 1.2598 and basically 1.2612. So it's a little bit wider. Nevertheless, if we break below this zone, then we are directly exposed towards 1.25. US dollar versus the Japanese yen market is looking very interesting. We got this movement to the upside, which has been seen very strong, which has let's say which has covered a lot of ground. Let me just take a look because I want to place that. Yeah, there you go. This is the swing high. But how much did the movement to the upside retraced already? Let's then take a look. So we will just place this one here and this one somewhere here, so you can clearly see that we are moving towards the level of 61. No, 61 is broken. 61% of the Fibonacci retracement has been violated for 147 and 52, and now all of this maybe just maybe 78% at 1.4948 would be the next target, but this target is very often rather let me say weak target. Not too many people acknowledge this kind of Fibonacci level as a strong one. It exists as a Fibonacci level. Nevertheless, it's nothing that that should worry the Fibonacci traders. It's not one of the most important ones. It's not even near, to be honest. 38, 50, and 61 are the most important ones, and the mostly traded Fibonacci levels. Now we need to we need to remove the Fibonacci, because the situation here is that we just hit the lows from the, let me just show you guys, from the, I think it will be 2023. Yes, this is the last day of the October 2023, and this is the low located here, 148.82. We hit this low, and the market reversed. Big bearish engulfing pattern was made here just below the next target for the bulls, 149.22, and below 78% of the Fibonacci retracement. Let's dig in a little bit deeper towards the recent price movement. So all of these levels here will be now technical support, right? So it's obvious. So we will just switch those levels colors to green. So we got two very nice ranges for the technical support. Now the intraday technical support is 147.67, and as long as we trade above this level, the outlook remains intraday outlook, of course, remains bullish. So we got this situation here on the US dollar to Japanese yen, very big bearish engulfing pattern, then continuation to the downside. Maybe the next target, which is located apparently at the level of 146.60, would be enough for the bears. Please notice the fact that we retraced recently. Let me just take my price range tool. Just recently the last correction was 1.40%. Let me just take a look at another one. It was a bigger one. I can see it here, 2%, no, 1.75%. All right, so any correction bigger than 1.75% would give us the overbalance of price and time, and that would mean the bearish divergence is possible here as well, and that would mean the movement to the upside is no longer a part of the up movement. That, I mean, the movement to the downside is no longer a part of the up movement. So in that situation, this movement to the downside would be a new cycle. So please watch 1.75% level from the top. Right, where is the correction? Let me just maybe made it for you. Guys, so you know what we are talking about. So let's just use the magnet. 1.75 would be more than this. Yes, any breakout below 146.26 would be considered as bearish, and we would have the overbalance of price and time. And last but not least, let's take a look at the gold market. The gold market, as you can see, is moving roughly around the level of $2,022. You can see it here that we broke above the orange trend line. Nevertheless, the market that was a false breakout. Market comes back to the main range. Let me just switch to the daily time frame chart because it looks like it would be better. There you go. It would be better for us to maintain our point of view. Now, what's happened on the daily time frame chart is way more important than on the intraday chart. So we got this line here, the blue one. We broke below it. Now we're testing it from the below, and of course, for now the price was the test was rejected. Any breakout below this is the technical support. Let me just update it and move it towards this low here from the January 17th of $2001. Any breakout below this level directly expose 1,972, and even the lows from the 13th of the November 2023 at 1,920. So very, very tough situation for gold. This is to be or not to be for the bulls. If they want to move higher, they need to break, and not only above the blue line, but above the orange line as well, and then test the 2064 level. If they fail, then we will quickly test one of these technical supports, then even 100 days moving average, and the outlook will be even more bearish for gold. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.